Happy Thanksgiving week and welcome back to Crop Talk with Karston. I'm Karston Donovan, and with December right around the corner for us, December 1st is the sales closing deadline for PRF insurance. So if you are interested in that, make sure you get that on your policy before December 1st. So with that being said, we obviously just want to do a quick overview of what PRF is and how it can be beneficial for farmers and ranchers in the area. As we know, Montana agriculture is built on one thing that ultimately nobody can control, and that's the weather. Whether you think you can or not, you can't. Mother Nature's undefeated. So whether you're running cows on rangeland or cutting hay for winter feed, moisture is going to determine everything. And when that moisture doesn't come, it's going to cut into your profitability really fast. And that's where PRF insurance is going to step in and help you. So PRF insurance is a rainfall index program through the USD and RMA, and it doesn't insure your forage or your cattle directly, but instead it's going to insure your lack of rainfall. It's going to use a 20-year rainfall data for a specific grid location, and when that actual rainfall falls below the average during the intervals that you select, you'll get an indemnity payment. So think of it like a safety net tied directly to the moisture your operation relies on. A couple things to really be aware of and make sure that you're knowledgeable on is that PRF is a area-based coverage, and so it's just going to be based off of that specific grid that your acres fall within. So, and that can obviously be different grids depending on how spread apart your acres are. So keep in mind that it isn't just only based off of your acres; it's going to be based off of that grid area. I think there's some confusion that can be on that and causes frustration sometimes for farmers and ranchers. So just make sure that you're aware of that. But all in all, it's still very good coverage and ultimately can be a very good risk management tool for you and your operation. So if you look at PRF in simple terms, you choose the acres you want to insure, whether that's pasture, hay ground, or both. And then you pick the months or the intervals that you want to insure, and those are typically 2-month intervals. And so typically you want to essentially choose the intervals that are going to be most important for your forage production. And then if the rainfall falls below the long-term average in the grid for the intervals that you select, you'll receive an indemnity. And the payments are going to come automatically. It's not up to you to make sure that you get a claim filed in a timely manner. Excuse me. There's no adjuster that goes out to the field. It's just automatically going to be based off of the data that comes in from those grid locations. So all in all, PRF insurance just gives you that risk management tool to help when the rain doesn't come. If it comes, great, you still receive the, you'll still be able to get the forage production that you need. Your cattle's going to be able to have the grass that they need to be able to roam, and you're not going to need to buy additional feed for them. So ultimately, if you get the rain, great. You didn't need the insurance, but if it's a dry year, which we have seen obviously in previous years, that's where PRF helps keep that profitability on your farm on those tough years. So I realize that that's a really quick overview, super quick overview, and if it's of interest to you, I think it's really important for you to get with an agent. Take a look at your specific location, your specific grid. Look at the historical data. I mean, we have all that information to be able to look back on to see, what the historical data says, how well it's been performing, how well PRF has been performing for farmers and ranchers in the area, and then I'll ultimately give you a quote to see, how much would it cost for you to have this coverage. So feel free to reach out, and hope you guys have a great Thanksgiving weekend.